Good day to everyone. In today's Growing Your Tree of Prosperity, I'm going to try a new approach. And this is a series of videos, depending on how popular it is, where I would perform a shallow dive into a dividends counter for the benefit of the viewership. Now, why is this a shallow dive and not a deep dive? The reason is because I do not wish to flout security laws. So the conclusion of a video is never a buy or sell call, all right? But what I will do is that I will give viewership the fundamentals of a particular counter, how to think about it, right? And it would really make it easier for you to perform your due diligence later when you decide whether to add a counter into your portfolio. Right? So today's episode, we're going to talk a little bit about LHN. All right, LHN. The ticker symbol is 410. 410. And this is a company that is in real estate management services. It actually optimizes the space for industrial, commercial, and residential spaces. And among all its revenue, the highest revenue comes from the co-living business known as Wu, right, which you see, I think, all around Singapore. So that's 52 million in revenue. There is also businesses coming from property development, which is much smaller, facilities management, and even energy in the form of EV charging stations. So this is, I would say, not a difficult business to understand for retail investors. Of course, if you're an analyst, you have to go deeper into the financial statements, but for retail investors, we just need to know generally what business it is in, okay? And when we read the news on the newspapers about LHN or Wu, we can interpret and filter the news, all right, so that it will change our buy or sell call, okay? Market cap is not too bad, 220 million, all right? Generally, I will try to avoid buying stocks that are smaller than 50 million in size. And what I really love about this counter is that it has a gross margin above 50% with a low price to earnings ratio below 5. Now, why is a low PE valuable to a retail investor? Okay, I'm going to give you guys a very streetwise kind of interpretation. When we are trying to buy a business from someone else, right, if you read books on Main Street Millionaire, which I'm quite obsessed about, like, for example, I want to buy a laundromat from somebody who has a laundromat. Typically, when we do the business negotiations with an SME, we would like to buy it with a price to earnings ratio between 2 and 5. Between 2 and 5. Okay, the reason is it's a little bit illiquid. I have to run it until I break even. And the break even for laundromat these days is about 3.5 years. So that's a PE of about 3.5. Okay. So whenever I find something in the stock market with a price to earnings ratio below 5, I get excited because buying this is just like buying a business from a businessman on the ground, except that you don't have problems in liquidity. It is relatively cheap already, and you can just buy and hold, keep it in your portfolio, and hopefully never sell it. All right, so this is the way I approach the investing world. Okay, so just a declaration of my vested interest. I do have a position in LHN. It is mildly profitable at the moment. And importantly, as a fun fact, LHN is also the landlord for Dr. Wealth. Yeah, which is why I've actually chosen this counter to talk about in detail today. Okay, all right. So what can we know about the dividends of this company, right? So for the people who follow my channel, my first question is show me the money, all right? And it's not too bad, right? It has given out 3 cents in February, May, and June 2025. Okay, so I would expect a very nice 1 cent dividend at the end of this month. All right. The annual yield, if you look at 12 months worth of dividends in the past, 5.8%, which is good. Okay, above 5% is decent for me. Okay, and obviously I went through the financial statements and we look at the cash flow from operating activities. We net it against your capex, and then we compare that with the dividends paid out. Actually, the dividends payout is well within the free cash flow. Okay, so sustainable cash flows, high yields, low PE. What's there to be? Nothing more than you can ask for, actually. Okay, now do make sure that these are historical dividends, so it's not fair to expect forward dividends to be as high or as regular as a real estate investment trust. Okay, but at least we've done our due diligence. We know that dividends are sustainable. Okay, so let's move on to our next slide. Okay, what are historical returns like? Okay, and if you look at my Python program and you look at the annual returns, if you've been investing for the past 10 years, the annual returns are quite fantastic. 25%. All right. Of course, the question is whether in the future you can get 25%. It depends. Okay, and I'll tell you what is the news that we are looking for. All right. Standard deviation of 45% means that accompanying this high return is higher risk. Okay, is higher risk. Okay, but the good thing is that the annual skew is positive, so it's a little bit like buying some kind of 40 or total effect, right? The upswing can be very, very high. Okay, but if you time it wrongly throughout these 10 years, if you actually buy it at a peak and you sell at the bottom, you could have had a maximum drawdown of 68%. Okay, so this is definitely not the kind of stable counter, right, that dividends investors and the older investors would look for. Okay, the drawdown is nasty, but if I already have a core portfolio of dividend yielding stocks, like for example, I have the banks, I have the REITs and the STI, maybe some business trusts. Okay, I have built a sizable portfolio of that, right? Maybe $1 million. Okay, there is no harm putting 1%, 10,000 into something like LHN. Now, if you look at these numbers, right, the high skew, the high returns, and the high standard deviation, not too different from Bitcoin. Okay, Bitcoin obviously has a higher return and a higher standard deviation, but mentally we have to put this stock somewhere, right, in the Bitcoin kind of category. Okay, I've also done a correlation analysis, and despite the fact that LHN deals with the management of real estate, the correlation with REITs is extremely low, right? Close to zero. I've even tried to correlate LHN with Capital Land, which is almost like a competitor. It's still 0.14. Okay, so actually, even though they are in the same business, the performance and the mathematical properties of the time series is very different, and you can actually complement the REIT portfolio even if you already have Capital Land. Add a little bit of LHN into your portfolio and you'll be fine, right? You in fact increase the diversification. Okay. All right. So what else can we learn about this counter? Okay. Well, LHN has unanimous buy calls from all the analysts. 4 out of 4 analysts has given it a buy call. The target price ranges from 0.55 to 0.61. So currently there is a little bit of upside left. But the bulk of LHN's performance hinges on Collywood as a co-living brand. All right. So if you believe that the co-living space is expected to do well in Singapore, then LHN is going to do well. If you think that it wouldn't do well, then it wouldn't do well. All right. And there is news that LHN wants to consider spinning off Collywood. And this is one of the major catalysts that all the analysts are talking about. And the logic of this spin-off is quite impeccable, right? Imagine this. You have LHN, the price earnings ratio 4 to 5. Okay. If I spin off Collywood as a co-living brand, and this is the bulk of where my revenue comes from, Collywood maybe, I'm saying that maybe it would perform more like a REIT, right? If it performs more like a REIT, maybe the price earnings ratio, right? In fact, it will become price to funds from operations. Maybe it will double, right? Maybe it will double. So the spin-off of Collywood is going to increase the value of the 2 new counters compared to that single counter before the spin-off. So I need you guys to understand that kind of logic. Okay. So very rarely LHN, they are 3 plays in one go. Okay, so it's really a 3-in-1 kind of investment that would satisfy 3 kinds of investors. So the first is the dividends investor. You get 5.8% dividend. Okay, it's not really correlated to REITs or maybe even banks, right? So it's a great way to have more dividends in your portfolio. So that's a very good play. Second is the deep value play, right? If you're the kind of guy, you're always looking for a laundromat to buy, you're a wealthy business owner, all you have to do is walk over to the stock market, buy LHN, add it into your portfolio. And the earnings will offset the amount that you pay for it, provided performance is consistent. For the next, within 4 to 5 years, you will break even. All right. So that's a deep value play in the style of Benjamin Graham. And finally, it is also a special situations play because you're betting on this spin-off of Collie Woo, and when there is a spin-off, there will be a massive unlocking of value in the counter. Okay, so it's I would say very lovable counter to me at the moment. Okay, but these are the things you need to think about when you look at this stock. Okay, now, like I said, I'm not going to resolve the buy or call recommendation. I'm not allowed to. I'm not licensed. Okay, do as a streetwise retail investor. All right. Talk to your friends who are real estate agents. Ask them about co-living. All right. Ask them what the business is like. Are you seeing any growth? Now, if you look at today's business times, in fact, I think that there's evidence that it's still growing. Okay. There's news on LHN in today's news. Okay. Today being, let's see, today being the 4th of June, right? 4th of June. Okay. Now, find out whether Singapore is still attractive to expat families and young professionals. All right, I understand that right now there is an AI wave of disruption going on, but so long as Singapore is attracting expat families and young professionals, co-living is going to do well. Okay, and of course you can ask a few real estate agents what they think about Collie Woo. I've spoken to some of my friends who were in the real estate industry, and the general impression of Collie Woo is that they are good, they are aggressive business people. All right, and they get the job done. Okay, so you do that. And more importantly, read the news on how the spin-off is proceeding. For Collie Woo gets delayed, gets postponed, that would be a significant negative if these timelines get displayed. Okay? And that's all for my content on LHN. I hope you like it. The number of views will inform me whether I will go on and talk about these stocks. I will try my best to focus on the small cap, mid cap, kind of dividends counters, because as I prepare these slides, I'm also teaching and educating myself on what these counters are. If you like my content, you can subscribe to this channel, and I do need a lot of subscribers. You can buy me a coffee. If you want to listen to my life story, figure out how financial independence works, I have a preview with Dr. Wells, Google ERM intro. Come for my preview to understand my life story. And that's all I have. Thank you very much.